Hello, ladies and gentlemen. This is Adam from Option Mindful, and this is another 5KP video for 20th of July 2021. We don't have too many left until this program is over, so over a long period of time, I can already tell you guys, we've been having quite a ride trading in these casino markets, and we've been running through all kinds of different types of trades, strategies, and so on, and experience a lot of things together. So today it's going to be an absolutely special program because we have another thing to talk about, and this is related to psychology and having really strong kind of mindset when you see your portfolio burn, even though all the fundamentals and everything is for your portfolio. So what to do in this kind of situations, how to react. I blame myself that I didn't get out of the trades in time. We could be doing this, but okay, if we are already looking at the portfolio that is significantly down, what can we do? And as option traders or as believers that the portfolio, the design of the portfolio is definitely going to perform very well. Just right now we're having a hardcore moment. So we're going to talk about this today, and we're going to talk about the latest economic news as well. Before we go there though, I'm going to show you my standard disclaimer here. This video is for informational, educational purposes only, so remember that I don't give you any advice whatsoever. As you see, this portfolio has been having ups and downs. From the previous week, you've seen we've been sharply down, and these situations, this is a market, this is a crazy market actually, since we had the thing that we're not supposed to be talking about. Since that thing happened, the markets became absolutely unexpected and unpredictable. The fear is sitting somewhere out there, and very detached from fundamentals. Lots of people talk about trading just price charts and technicals, because fundamentals have nothing to do with this. Deep inside, I still believe that if something has a fundamental reason to grow in the future, okay, or just completely makes sense, that's a good investment because you understand it, you know it, you feel good about it. But definitely number one thing to look at right now is technical patterns, and also deciding what you want to do in your portfolio. So we're going to be talking about this today. And as you remember in our portfolio, for the last couple of weeks, basically, I've been talking about investing rather than trading. I mean, this was an investment portfolio. I would probably add some trading positions to this if the markets behaved a little bit differently. Unfortunately, they didn't, and we ended up with just an investment portfolio. And I think that's also a mistake from my side, because I just was too keen to go into one direction and over-invested a little bit, and therefore I'm a little bit blocked with my currency right now for trading. But okay, we're gonna learn another lesson in there, how to get out of this kind of situations and what's the plan. And I think this can be very useful, because that's going to train your mindset as a trader when you see things go down against you, even though the fundamentals or general economic situation didn't change, and you believe that the investment you made makes absolute sense. What we can do with our current portfolio, having heavily invested in mining stocks for uranium and silver and gold, in a situation where Fed is just printing into oblivion. We have rising inflationary numbers, people, not being able to get jobs, lots of things, which are still terribly wrong, and probability of having more of the same, meaning that we will probably not get higher interest rates, and then just easily get out of the current situation that we're in of easy money. Very likely there will be more and more printing. So if these fundamentals are still there, how to react to change in the wrong direction in your portfolio, we're going to talk about this. So knowing that, I'm going to just straight jump into the program for today. So we are going to have two parts of this program. So we have part one for YouTubers, and also part two for my students. So with YouTubers, we're going to discuss what to do with this kind of situation, how to behave, just shortly in theory. If your portfolio is burning, basically, in silver, energy, and basic materials were falling like crazy for the last month, or maybe even more. So what to do, traders which are not very experienced, or investors which are not very experienced, who don't know what they're doing and just gambling there, not understanding fundamentals, would probably panic. because our trading was based on fundamentals and those fundamentals didn't change, we are not panicking. However, there were a couple mistakes that we made, that I made here. And the mistakes were I probably over-invested in assets which are highly volatile and can move quite a bit in a very short period of time. The big mistake here is that I didn't properly allocate the currency into the assets and just being able to focus on some other things as well. Just putting too much eggs into one basket was my mistake. But still, I believe that basket is a good basket, and simply my strategy for this portfolio, this current portfolio, is going just to remain the same as it is. It's an investment portfolio which is waiting for a reversal or good times, let's say. So I did not basically monetize on the losses that I see in this portfolio, because frankly I believe it's very unlikely that these losses will go much deeper. I believe that we will have a reversal very soon. So panic will always get you to the point where you exit at the point where you exactly should not be exiting, and also greed gets you to the point where you enter where you absolutely should not be entering. Our positions are not so bad. We didn't enter out of greed and we didn't panic out. So I will show you what happened there. We're going to discuss this, and also I will present you a little video which I found online, which I find very cool, from Silver Chartist, which talks very calmly about fundamentals and having a portfolio the way we have it. Actually, it's very up to date when it comes to what we have in our portfolio. And then later on, I will talk about, to my students, we'll go position by position. We're going to talk about the concept of cash flowing of assets, which are basically taking a big loss. And, that's something that I can share also with you YouTubers, guys. Like, imagine this situation: you have a house, okay? And the price of this house can be moving up and down. Of course, we are all used to a real estate market when prices just go up and up and up. But remember 2008, don't forget 2008 crisis. And, so they can actually go down as well. So imagine a situation when you have a house, you own a house and you rent it. And then what you see is, it was super expensive, but now the price just basically halved, from what you've seen on the screen. Like if you were monitoring the price of your house on some trading platform, you would be seeing some value there, let's say $500,000 for a price of your house. All of a sudden it's worth $250. But since your portfolio here, this house is an investment, it's a cash flow machine. It's not an asset that your strategy, for which your strategy would be sell it high, so buy low, sell high, trading strategy. Your strategy for this house was to cash flow, therefore you rented it out. So what does it mean for you? Are you now panicking right now because the price went down to $250? You want to get rid of it very quickly right now, as it is half price right now? Or are you just going to keep renting? And this is renting it out. And imagine you have somebody who's renting it since years and just regularly paying you something every month. This is the chart of your income when you collect your rent every month for this house. So notice this is always just going up. Maybe not by hundreds of thousands, maybe it's not going up too steeply and too fast, but at some point of time, after a longer period of time, it will reduce the value at which you bought this house or own this house by the amount of rent that you collected. And this always provides cash in your pocket every month. It brings every month cash in your pocket. It doesn't really matter so much how much it's worth. If it can bring the same amount of cash or maybe more, if this house is priced, okay, that's all right. I don't care. I have an asset which brings cash every month to my pocket. So this is how I would want you guys to look at the portfolio that we currently have, even though you will see some terrifying numbers there today. So just think of this house. Before I jump into the portfolio, let's go and look at the browser first. That's the video I'm going to show you just in a moment. And see what happens. So basically, let's just jump to the briefing.com, or maybe, let's just go and see S&P 500, what happened there. So we had a little crash here, resulting in a lot of fear because of the, fear of lockdowns and whatever. I've really stopped paying attention to this. However, that's not really crashing, it's just correcting. And today you see it's already recovering. And, this fear moved a lot of stuff down yesterday. including mining stocks, and brought a lot of sectors together down. Same with crude. The price was just hammered down, energy prices going down like crazy. Gold was a little bit destroyed, but coming back, it was just, it's recovering really nicely. Now it's sitting at the point where it can fill that gap. So that's good for gold. Silver was smashed, like crazy. You see it flagged here, just dropped basically from 28s to 25s, which brought also down our mining stocks. And these things are in a little bit oversold conditions. However, if you look at miners or mining sectors, GDXJ, for example, for the juniors, what you will see, guys, it's like in extremely oversold conditions. I mean, it dropped from 55s basically to 10 points to 45s, 44s. Massive sell-off. The reasons for that, well, lots of reasons, but basically, guys, the precious metal market is known for being volatile, okay? Markets, or governments don't really like gold or monetary assets which are competing with it. As you can see, also Bitcoin dropped significantly in this period of time. Ethereum, crazy movement down. They can move, you need to be prepared for this. However, right now it's in conditions where technically it's absolutely in the area where it's oversold. Doesn't mean that it can't go down further. Well, yes, it can. However, it's not very likely that it will because of these conditions. And also silver, can it go down a little bit more? Well, yes, it can. However, also it's very unlikely, taking into account all the situation that we're having right now on the market relating to monetary policies and so on. So the situation looks like this. VIX is really high now. You see this fear popping up yesterday. VIX jumping from like 16 levels to 26 in just a moment, basically. So you see how volatile these markets can be. Now it's coming down a little bit. All right, so we have a little bit of fear on the markets, and if you go to the FinViz, you will see what I'm talking about by simply checking out, course USD to Euro. USD just got stronger. So what happens, when people fear or get to fear things? They escape to currency, they escape to cash. That's the first thing they run, and then they run to treasury bonds. 10-year benchmark smashed down here when it comes to interest. Okay, so and of course, when this goes down, gold moves a little bit up. So you see that we have some sort of a fear or panic happening on the market, but it's not a crash, guys. I don't see a crash coming up. Seeing such a recovery today, I don't see a crash. Lots of news. But I want to show you something else on the groups here. What you can see is, guys, that 1 week performance, energy, basic metals destroyed. Energy was basically destroyed for 1 month. It's in highly oversold conditions. So to me, this is simply an opportunity. Like, if you really ask me right now, where would you start looking into if somebody asks you to invest some cash? I'll be like, guys, this sector was destroyed. And fundamentals are absolutely strong for basic materials and energy. Take, for example, oil. Oil is the, basically the power that moves the how do you call this, military industrial complex of the US. Like, without oil, nothing moves. Basic materials, competition to US dollar, which is being printed so much, like gold and silver, monetary metals, demand for silver, okay, for the cars, for solar panels, for renewable energy, for electronics. This did not change, and this has been sold off. If somebody really asked me where I would allocate, I would just look at the red lines in here. This was smashed, and I would look at some sort of recovery and start building it up. So that's just a couple comments here. I thought I wanted to show you something in here, something else in here, but I think I'm going to skip it, just jump to calendar for a moment and then see what's going on here this week. So we'll have some monetary policy statements. I don't expect anything special there. Tomorrow, PMI numbers, nothing special. So this week seems to be a little bit quick. Canadian CPIs announced next week, and I would be looking into Wednesday, July 28, because we have this FOMC statement and press conference, these guys usually move the markets like crazy because they're going to talk about interest rates. Will they rise them? No, I don't think so. Will they lower them? I don't know. Will they keep them the same? Very likely. Yeah, but we don't know. And then some other numbers, probably not that much important. At GDP, this could be also interesting. What's happening there. So watch for Wednesday and Thursday. Be prepared for some sort of market move. Yeah, so now coming back, after looking at what's going on in the markets and what's going on in the markets today, just coming back quickly here, and I'm just going to go to home to show you that today we are more bullish than bearish. Things are recovering. So from yesterday's smash and yesterday fear, lots of green areas, and probably also on the GDXJ. Probably if I just type it here, so mining stocks sector, a little bit recovery from the smash yesterday. So coming up a little bit today, just about 1.5%, means our portfolio probably going up a little bit in price, but that doesn't mean it will not crash anymore, but we'll see. But that's not the topic of today. What I wanted to show you is the portfolio first, so how we are doing in our portfolio, and then play you a little movie from the Silver Chartist and this Liberty and Finance channel here. Will silver fall further? Yeah, we're interested in this because our portfolio is mostly in silver, right? Silver mining stocks, and some uranium as well. But that basically also talks about uranium as well. And you will listen to some advice from the silver chartist here, and I think he has some wise words to say. But before we do that, let me show you this catastrophe that we are living in. So the portfolio has been smashed. Okay, as you can see, we came back to almost the original numbers from a year ago. But is that really true? No, it's not. So we have been just beaten down because we own a lot of assets which we purchased at a price which was definitely much higher than its current price. But we own them. We didn't monetize on this, and we collected a lot of premium for it. So the portfolio has been beaten down, but as you can see, okay, even after such a huge drop, 3.8K drop, we're still, in a profit zone. So we're not losing really from our original cash that we invested, and that's because we collected a lot of premium over the longer period of time. So remember this, the house and the rent. The rent that we received, didn't mean too much to us. I mean, we lost a lot of profits, but we didn't realize that loss yet. So there is a lot of potential for coming back up. That's what I wanted to tell you guys. So we're cash flowing very little now, $850 per day, but that's basically our rent. Okay, so if you look at that house again, that's what we're collecting every day. So if we're collecting every day $8-9, so imagine it's $10 for 30 days, it's $300 a month. Okay, so we're not there yet, but we might be, because there is still some pending positions here to start cash flowing from. All right, so but in general, you can see we are not really in good situation here in terms of our profits, which were very close to 10K already, dropped so much, but we didn't realize the loss. We are living in this portfolio, and we are investing in this for longer term. These are our houses. Okay, none of these are speculations. None of them are in a sense that they are trades. They are investments. Okay, so that's a very big difference, which we all need to understand. How bullish is this portfolio? Well, it's still very bullish compared to our insurance. Here, our insurance is currently losing a little bit because SPY didn't drop crazy. We didn't experience a crash, but we were insured. Okay, so that's the negative delta here of almost 3 points. The rest is bullish, some of them with the NAs we just don't see. So we very bullish, I would say, compared to SPY movement. But we are more interested in precious metals. What really moves us are those two futures. Here they more indicate how good and how well we are performing. So interestingly, if we are having shares or stocks from mining companies like silver and gold, they will react faster to or basically earlier to the correction, or basically coming back up, so to the bounce, than the actual metals. So seeing these first will tell you where these things might be going. But I like to also look at the charts of gold, for example, to see some potential where this thing might be going, and also expect where my mining stocks may be heading in the future. So right now you can see we had this little crash here, and now it's slowly recovering and sitting still above 1800s. Well, my prediction is that it could actually smash down to 16, somewhere there, 1675, somewhere at the bottom here, 1675. That could be a zone where it could crash for the first time. So that would be another support zone I would see. Let me just quickly draw it to you guys. So like somewhere there, 1675, I would say somewhere there would be an interesting zone, 1670, 1675, somewhere there. If it keeps going down, that would be a next support zone. And then the next ones, as you can see, it could go even to 15. Very unlikely, though. I would say 1600s. Okay, that could be another one. Okay, somewhere like around there. Okay, so that would not be something that would blow me away and be like, okay, what would I do in this situation? Well, my plan would not change. The fundamentals will still stay the same. So, in my portfolio, I would just keep cash flowing, guys. I would just take it easy and, just forget this portfolio for a while. If it continues going down like this, that's not sustainable. Okay, so silver, on the other hand, what you can see, it broke out a little bit out of this ascending triangle that I draw in here. I could actually fix it a little bit. I mean, you can draw it in many, many ways. Some people just connect it from this bottom line here and going like this. So you see that we broke out of the ascending triangle a little bit. So for silver, same story. It could continue dropping down, hitting 24. That could be a level, and then we could see also this silver drop to 22. And I think it's very, very unlikely that it could break this zone. Okay, so we're sitting right here. It's kind of you can see that it's bouncing somewhere between 22 and 30. That would be the movement zone to me. And now we're sitting right there. So the metals are, today just sitting still at the same level, but it's not very unlikely that these things can drop to 24s. I think it would, even if it drops there, or 23s, somewhere there, 23s and a half, but I would rather say 24s. If it gets there, it's very likely it's gonna bounce. If it doesn't, the next stop is 22. But that's absolutely very, very, very unlikely. Okay, taking into account the demand for silver and all this, and production of silver, cost of production, it just doesn't make any sense. Okay, so don't panic. All right, actually I expect some sort of a steep recovery, and if I see silver going above 30, I mean, the next stop is just 50. That's just that simple. Over a couple months or a quarter, it's just that simple. So that's my predictions here. And you see, portfolio is kind of recovering now. It's just moving a little bit sideways today, but recovering. We have a little bit of increase here of value. I mean, everything is kind of green now. So we're cash flowing, and just sitting on this and bringing the rent into our pocket. Okay, I can't be trading because this account is, as you can see, closing only. Okay, it's closing only. I can't do any new trades right now. Account is over. I just simply over invested in the stuff that I really like, which is silver, gold, uranium, and more uranium. And probably with a portfolio of this size, it's not such a big deal because it's just 5K, but if this is all the cash that you have, probably you need to be more wise than me in terms of allocating your assets, because then you're going to be blocked. You basically be closing only, and your choices will be limited in terms of how to handle some of these positions. Right now I am basically limited to doing this, okay, if I don't want to take any losses, okay, like this, which I'm not going to take because fundamentals didn't change. So before we go to the part for my students, I'm just going to shortly play you this video here and just listen to the advice of the Stephen Penny.
But as we see this price action, like this daily price action, it's important not to get too hung up on that and kind of look at the big picture and where we are. So kind of your perspective on the strategy that people should have when investing.
Yeah, I think I like to say this a lot, more important than predicting the next short-term move is having a strategy to deal with a variety of different outcomes. And there's no right strategy for everyone. So here's 4 key ones that we just talked about in our report last weekend. Number one, you could simply do nothing and wait for a technical reversal. There's nothing wrong with that. Some of the smartest, wealthiest investors in the world, they wait for things to reverse. So that's one option. Number two, you could just dollar cost average. That's what I personally do every month with physical metal. I just buy just a little bit every month, no matter what the price is. So that's another approach. Another approach that I take with my longer term mining stock portfolio is just to scale in on weakness, keeping some cash available and not necessarily trying to nail the bottom, but buying a little bit every time there's a really sharp sell-off. And that can make sense for some people. And then, like I said, you can simply just do nothing. Maybe you've got no cash available. As long as you still believe in the long-term fundamental thesis of this sector, there's nothing wrong with just turning your screen off for a couple months and don't even look at it, as long as you still hold that fundamental conviction. And then position sizing is something to think about too. A lot of people, I feel like in our community, put their whole life savings into these sectors. I'm not going to say that's right or wrong, but these are things to think about. How much do I want to risk in this sector? So hopefully those thoughts helped.
Before we let you go, did you want?
Yeah, so you could hear the man, and he basically summarized to what I was talking to you guys about. So portfolio, the size of your investment, and also just remember this guy, he was talking about investing, just buying stuff, okay? We are doing also this, okay? So reducing the cost of the stuff that we own. So investors who are just simply buying the stocks and not doing option trading, well, they're limited to just waiting and owning something, but just it's like this house standing still waiting to come back up in price. We add this. As option traders, we can add this, okay? And that's our power, and that's what I'm doing in this portfolio. So now I'm going to move to the part for my students, and we're going to go deeper into how to handle this stuff in our portfolio now. So we're going to just go position by position, and I'm going to explain to you how to get out and collect more of this, right now. So thinking also that this deep may take a little bit longer than we would like it to take. Okay, so see you in a moment.